to be falling fast.
That's the futures or the spot?
No, that's the spot.
Okay,
yes.
Yeah. So 4% on futures.
Yes. So clearly there's pressure on that count. And Interglobe, in fact, has if you can pull up the intraday chart, you'll get a sense. Not as bad. It's in fact recovered. And okay, we've held up where Interglobe is concerned. So in that sense, it's okay. Let's go across. We have Sanjay Shah, who's the Chairman Managing Director at Prudent Corporate Advisory Services, here to talk to us. Sanjay, hi, very good morning. Sanjay, give us a sense of how the domestic investor flow is holding up. You have a very good sense, you have a very good pulse of that. FIs have been continuous sellers. Give us a sense of how the domestic investor is reacting and what's helping them stand out, in your opinion.
Good morning. Good morning. So far, I think the retail has been very, very steady. And as you rightly said, that we are very strongly connected as far as the retail through SIP is concerned. And SIP book is really becoming very, very strong. So if I just tell you the number, at the beginning of this year, my SIP book was about 980 crore. And I'm talking to it has already touched the 1100 crore. So I think the 29,000 crore number, which is coming from retail every month, I'm very, very hopeful that this number is going to go, I think, gradually up and up, only because if you look at ground level, I think people are very comfortable. I think the overall, even though last 12 months was a consolidation period, but because of SIP, I think your last 12-month market return may not be very positive, but because of the rupee cost averaging, people has made roughly about 7-10% through SIP. So I think that's the reason that people are very, very comfortable. And you don't have any options of alternative options are gradually drying down as far as investments are concerned.
Right. Sanjay, hi, morning. Good to have you on the show and congratulations. Your AUMs have now crossed 1.2 lakh crores. Wanted to get a sense on where, investors are now finding comfort. Is it the large caps or, there's still flows going into mid and small caps?
If you look at the flows, you need to look at from two angles. One is the lump sum money, another is the SIP book. And SIP book is always long-term in nature, where in our 1100 crore of SIP, almost 1/3 comes in small and mid cap. However, new money is going towards the hybrid category, multi-asset relocations, and large and mid cap. So these are the three segments which is occupying larger space as far as new money is coming in. However, if I tell you, let's say, for example, we do a 2,000 crore of mobilizes every month, almost 1100 crores come by way of SIP, and hence the mid and small cap money comes very regularly through SIP.
And Sanjay, talk to us about Prudent in particular. How are yields shaping up for you? How are AMCs reacting? Any possibility of a cut? That's the eternal question, right, for you. Talk to us about how that is shaping up in terms of industry.
I think it's a regular tug of war, because as the AUM goes up and up, the incremental TR will come down for the AMC. Sure. However, I think at the beginning of this year, there was some cut came from two leading AMCs. However, we assume that at least because unless there is, so there are two things which is happening. One is there is already a consultation paper from SEBI, which will see the lights on 17th of December's board meeting. Other than that, I think our assumption was that for next 12 months, see a huge impact other than half a basis point. So if you look at my current book yield is 90.5, and we say that it might come down to 90. So half a basis point was, or 0.5 basis point was the projection from our side, but we do not know what will happen on the new consultation paper where SEBI will come out and what's going to be the impact of that.
Right, interesting. So Sanjay, give us some insight. Where is it that fresh money, sectorally, if at all, is finding its way? Any sectoral funds, etc., which are seeing more traction than others?
Yeah, so I think the NFO still continue to mobilize money, and a lot of, because if you look at in last couple of years, a lot of new AMC has entered and everybody wanted to fill their basket of funds. So if you look at incrementally last 3-4 months, new AMC is coming out with the new fund to fill their bouquet of offerings. And that is where I think if you look at my monthly collection of 1,000 crore of new money, roughly 18-20% money comes from what you call the new fund offer. However, it's not that the money is coming only because of new fund. Another point, I believe that the additional incentives which SEBI has announced for money coming from the beyond 30 cities and from the women investors. So we being the retail guy, we believe from 1st February onwards, you might see good amount of traction for the new investor to join the industry. So if you look at roughly, I think industry had about a crore. Last month, 8,34,000 new investors is added. With this maximum 2,000 rupees per investor incentive should be a good incentive for people to bring new investor to the industry. That's going to be very meaningful traction for next 1 year.
Sanjay, I bet you're also feeling the heat from what's happening in the primary market because a lot of liquidity is finding its way into the new IPOs, right?
So rather we are the beneficiary because as the promoters are able to offload, so there are two things. One is retail is giving money to the asset management company, the domestic mutual funds, and they have been subscribing to the IPOs, which is going back to the promoter, which is again coming to the financial market for investment. Because if you look at a lot of reports says that in the last phase of IPO, I think a lot of money has been through offer for sale. And wherever promoter has done a dilution, I think it must be for making their life secure, and that is finding a way into capital market.
Sanjay, what's the risk with regard to your partners? Could the payout ratios go up, and what's playing out over there? Give us a sense of the trend that's playing out, because payout ratios have gone up. Could they go up further? Could they hurt your margins? Give us a sense of that.
I think we reached to a good level of sharing understanding with the partners, and I assume it should remain steady. However, only question would be that incrementally, if any change comes because of change in TR, I think that only time will tell how are we going to pass on that to our business partner. More or less, we have made it very clear that it's a business of 70-30 kind of a sharing, where 70% is shared with our partners and 30% is retained by us. And you understand that on 30%, we have a almost 142 branches, large technology platform, almost 1,600 people. So I think that's a very, it's a very thin margin business. So it's a business related to volume, and 70-30 is a very well accepted sharing for us.
Okay. Sanjay, we'll leave it at that. Thank you so much for coming in and speaking with us. We'll let you go on that note.